Can Bitcoin really reach $100,000? Sounds outrageous, right? Welcome to a world where the outrageous is possible, and the impossible is just a challenge waiting to be conquered. Just a few years ago, the idea of Bitcoin even existing was a wild thought, and yet here we are, discussing its potential future. As it stands, Bitcoin exhibits higher volatility than Ether, a phenomenon that has caught the attention of market analysts and investors alike. But why does this matter? Because volatility, while often seen as a risk, can also be a sign of potential for significant returns. As we stand on the precipice of the next Bitcoin halving, speculation is rampant. An event that has historically proven to be a catalyst for major price movements. It's no wonder that the whispers of a $100,000 Bitcoin are becoming increasingly louder. But is it just wishful thinking, or could there be more to it? What are the factors that could potentially catapult Bitcoin to such dizzying heights? Could the lovable Shiba Inu mascot of Doge be dethroned as Austin's official currency by Bitcoin? Stay tuned as we delve into factors that could potentially see Bitcoin soaring to such dizzying heights. Bitcoin's volatility has been on the rise, even surpassing that of Ether. Now, if you're new to the world of cryptocurrencies, you might be wondering, what exactly does this mean? Well, in the simplest terms, volatility refers to the rate at which the price of an asset increases or decreases for a set of returns. Bitcoin is known for its rapid and significant price movements. In a nutshell, a more volatile Bitcoin means that it can potentially see rapid increases in its value, but it can also experience dramatic falls. Recently, Bitcoin's volatility has seen an uptick, even outpacing that of Ether, another major player in the cryptocurrency market. This is quite interesting because it diverges from the usual pattern we've seen in the past, where Ether typically held the crown for being the most volatile. So, why is this happening? Well, there are several possible reasons. One of them is market trends. The cryptocurrency market is still relatively young and can be influenced by a variety of factors. This can include anything from changes in regulatory policies to shifts in investor sentiment. Speculation also plays a significant role. Cryptocurrencies, including Bitcoin, are often subject to speculative trading. Traders buy and sell based on their predictions of future price movements, and this can cause prices to fluctuate wildly. Global economic factors can't be excluded either. Things like inflation rates, political instability, and changes in economic policies can all impact the value of Bitcoin. However, it's important to remember that while increased volatility can lead to larger gains, it also means increased risk. This increasing volatility could be a double-edged sword, driving Bitcoin's value either way, but could it push Bitcoin to $100,000? Another major factor to consider is the upcoming Bitcoin halving. Now, for those who might not be familiar with this term, a Bitcoin halving is a scheduled event in Bitcoin's protocol where the reward for mining new blocks is halved. This event occurs approximately every 4 years and is a core part of Bitcoin's deflationary nature. Historically, halving events have been significant catalysts for Bitcoin's price. The reduced supply of new Bitcoins entering the market creates a scarcity effect, often leading to increased demand and subsequently price increases. The previous halving in 2020 saw Bitcoin's price soar from around $9,000 to an all-time high of nearly $65,000 in just under a year. Now, as we approach the next halving event, there's a buzz of anticipation in the air. Speculators are eagerly watching, analysts are making predictions, and investors are positioning their portfolios. The question on everyone's mind is, will history repeat itself? Will the upcoming halving trigger another bull run, propelling Bitcoin to even greater heights? Of course, it's essential to remember that while past performance can provide insight, it's not a guarantee of future results. Other factors, such as market sentiment, global economic conditions, and regulatory developments, also play a crucial role in determining Bitcoin's price. The upcoming halving could create a scarcity effect, potentially driving Bitcoin's price upward. But is it enough to reach $100,000? So, will these factors propel Bitcoin to the $100,000 mark? This question has been the driving force behind our discussion. Let's take a moment to revisit the key points. Firstly, we've seen Bitcoin's volatility, usually a measure of risk, outpacing that of Ether. This heightened volatility, although seemingly daunting, is actually a sign of increased trading activity and investor interest. It's like the market is holding its breath, waiting for the next big move. Then we dived into the highly anticipated Bitcoin halving event, This event, expected to occur in the near future, is poised to cut the mining reward in half, effectively reducing the number of new Bitcoins entering the market. This scarcity factor has historically driven the price of Bitcoin upwards, and many believe this trend will continue. In the midst of all these factors, expert opinions have been pouring in. Notably, the EAG Director of Research has forecasted Bitcoin to reach a staggering $100,000 by the year 2025. That's a significant leap from where we stand today, but is it really that far-fetched? With the increased volatility signaling high market interest and the upcoming halving event likely to create a supply-demand imbalance, the stage appears set for a potential surge in Bitcoin's value. While the journey to $100,000 seems steep, these factors suggest it's not entirely impossible. So keep a close eye on Bitcoin, because the ride might just be getting started.